The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 2nd, 2014, terrific Thursday edition. What a way to start a year out there. Hope everybody had a fantastic New Year's Eve, a nice New Year's Day as well, and thanks so much for joining us here. We are grateful for your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with our empowering beliefs. You know it. It's called Become Your Own Electrician, the electrician of your beliefs. Because beliefs, they've got the power to create, as well as that power to destroy. And you and I, we've got the amazing, awesome, incredible ability to take any experience of our lives and create a meaning that, well, quite frankly, one that disempowers us, or better yet, one that can literally save our lives and empower us to places we never even dreamed. Think about it like this. There's only one thing you can control in life. Only one thing. Boy, does that make it simple or what? That one thing is the meaning that we give to something. That's the beauty of the markets we trade. We've got bulls. We've got bears today. One that sees an event as a selling opportunity and one a buying opportunity. The key is, it's your beliefs. It's the meaning that you give to events that change your life, folks. You are the one in control of that meaning. Now, it's really pretty cool because when you think there's only one thing you control, boy, that makes it easy as far as what it is you're going to focus on. Because here's the deal. What we can or cannot do, what we consider possible or impossible, or as I like to say, I am possible, is rarely a function of our true capabilities. It's more likely a function of our beliefs about who we are. And that matters because as we begin 2014, many of you made some New Year's resolutions out there. What I want you to know is that all breakthroughs, all personal breakthroughs, they begin with a change in beliefs. So, how do we do that? How do we change our belief system? The most effective way, I guarantee you, the most effective way is to link your brain to massive pain. How about that? It's the only time I'll ask you to do that. You want to link your brain to massive pain with that disempowering belief, because we must believe at our deepest level that disempowering belief has cost us in our past, and it will continue to cost us in our present, but ultimately will just simply bring us pain in the future. Why would any of us want to do that? That is what is called the Charles Dickens process. Now, sometimes knowing what we don't want is truly just as important as knowing what we do. My belief is that knowing both is key, because once you rid yourself of that disempowering belief, then you've got to replace it. You've got a little void out there. Thank goodness you'd have a void, and you want to replace it with that tremendous pleasure and idea of adopting the empowering belief. So you've got to have them both out there. And here's the beauty. You've got to know that at any moment, I mean right this very second, that a decision that we make can and will change the course of our life forever. Could be the next person you stand behind in line. Could be the next person that you would take a phone call from. Maybe it's one that you're going to make. Maybe it's the next movie you see, the next book you read, the next page you turn in the book. Maybe it's the next workshop you attend. Maybe it's the next newsletter you read. Any one of these things could be the single thing that causes your floodgates to open. And then all the things that you've been planning on, all the things that you were waiting for will just simply fall into place, folks. Let's make 2014 the most incredible year yet. Thanks so much for joining us here at TFNN. Let's go check out these markets here right now. We've got the Dow trading down 97 points. It's trading out at 16,479. Easy come, Easy go. Well, the S&P, it's down 11 points. It's trading at 1837. Composite off 32 points, 0.75% to the downside, leading the charge to the downside. Now you got the Russell 2000 jumped into the game. It's off 0.8%. It's trading down 9.50. Apple's off about $8. Microsoft down 16 cents. Google down 9. Cisco off 11 pennies. Intel off 47. To the upside, you've got Essex. I'll get it out. Essex Property. That's up $3. You got Splunk up $3. You've got Oramed Pharmaceuticals up $2.50. You've got Wynn Resorts up $2. Royal Gold up $2.17 to the downside. Priceline leading the charge, the downside off $11. Google behind it, drafting just behind it, down about 9 right now. Apple down 8. LinkedIn off 7. Amazing Amazon down $3.50. 3D System Company Stratasys SSYS off $3.70. And our call-in number, 877-927-6648. And, oh, boy, we've got the beware caution sign out. It came out this morning. Didn't notice it during the first hour, but we got it noted right now. And that is called the most bearish reversal pattern in Western technical analysis that you can get. It's called the island reversal pattern out here. Now, folks, we're looking at the New York Stock Exchange. I hope you're watching us on Tiger TV. If you're listening on your radio, your mobile device at TFNN.MOB, I thank you for doing that. Remember, you can get the live stream of the show by going to the homepage of TFNN.com. Upper right-hand side, you'll see that button, 3 smartphones. Click on it. You'll get this show streaming live to you. And, of course, you can get the archive of this show on Channel 10. Wow. What do we have out here? Well, on Friday, we got the New York Stock Exchange. It tested, and it moved above the October 2007 swing point high. That number was 10,387.17. Now, on the session on Tuesday, it did it with a gap up. That's a beautiful thing. Well, it could have been a beautiful thing. Now we got to put up the beware sign out here, because the top of December 30th, the high of December 30th, the number was 10,361.37. December 31st, when it opened up, the low of the session was 10,366.58. We got a small little gap out there. That small gap really wasn't a big thing until this morning's open. Because what did we do this morning? Not we, not me, not you. What did the NYSE do this morning? Yikes, folks. It gapped down. That created an island. It created an island at the highs, the all-time highs out there. There are some folks that are stranded. You want to talk about folks that are maybe stranded in Antarctica? Well, it could feel like Antarctica if this ends up being a top out here. It's one that we have to pay critical attention to out here, because it is the most bearish reversal signal. Like, it's even more bearish when it happens at all-time highs out here. Doesn't mean that the top is in. It means that, boy, we just got the biggest signal here from the bears that one could expect. Likewise, if that pattern fails, because it is the most bearish pattern out there, that'll tell you something about what's going to happen in 2014. So that is something we need to be paying close attention to. I've been pointing out to my subscribers for the last several days here a couple of divergent patterns that says that there is basically, I use the terminology that I smell a rat. And inside the New York Stock Exchange was one of them. Well, that smell is turned to reality as we speak here this morning. You know, you got to let the market prove itself to you, and right now it's proving in the New York Stock Exchange that there is some real problem out here. Now, with regard to island reversals, you might say, well, Steve-O, this is what I would say. When was the last time we saw an island reversal? Inside of the New York Stock Exchange, an island reversal top, that is. And that's an excellent question. And I tried to go back during a break to see when we had one out here. You saw an island that actually formed out here on the trading session. So the most recent one, there was one up at the highs out here on May 28th. There was a key reversal session, the May 22nd level. Market moves down. It gaps up between May 24th and May 28th out there, and then gaps down in the following session on May 29th and never closes inside that island. That led to a decline, a fairly steep decline into the lows of June 24th out there. So there was a little bit of an island reversal pattern inside of the NYSE. As far as other island reversals out here that actually formed and or held, I don't, nothing, because I just noticed it as we were coming onto the air and tried to do a quick scan out here. What I can tell you for certain, now, if you look at the black diagonal lines going across my screen, that's the rising price channel coming off of those 2011 lows out there back in October 2011 out here. So price also running into the diagonal resistance inside the New York Stock Exchange, but we want to be paying attention to that island reversal pattern. It's the only index that I show here this morning that had that gap in it, so we want to be paying close attention to that, right? Yes, absolutely. Now, what else we got to look at? Well, the other rat that was out there was the VIX index. And you talk about a rat. We got, if I were teaching you how to buy things out here and use candlesticks, we had the old hammer candle. Your favorite candle and my favorite hammer candle, and that's the one-day reversal. That one-day reversal, unlike an island, that's got to take at least 3 sessions, a minimum of 3 sessions out here. Well, we got a hammer candle inside the VIX. That was on December 26th out there as it was making a low. You then had a nice little bullish engulfing candle. That took place in the very next trading session. And then you had a gap up and you had to move higher, and that was on December 30th as our markets were cruising higher out here. That's a little divergence because we normally don't have the VIX moving up. It just didn't just move up. It moved up by nearly 10%. It was shy of 10%. Nonetheless, it was still very close to 10%. That is a big move in the VIX to be moving higher as well as our markets. One could have written it off as, well, people are just simply paying a premium for insurance because they're a little bit concerned about the beginning of the year out there. That's one way to look at it. We'll also have the 50-day exponential moving average. That's the red little squiggly line going across my screen out here. When price gets above that level, that is bearish in the markets. Well, on Tuesday, as the markets were moving higher, as they were closing up at their highs out here, we had the VIX. It was screaming. It was trying to get above the 50-day. Didn't do it. Got backed off, but not so today. It is well above the 50-day. It's above the 50-day exponential moving average. That number is 1395. You're traveling at 1433 out there. That smells of rats in the kitchen, or at least in the stock market out here. So that's in the S&P 500. That is not a good scene. Now, the only real positives that we can take here today, and this is going to be really the third charm, if there is a charm out here, we'll find a fourth charm as well, because you've got to have as much charm as you possibly can. That's going to be volume. And what's the volume on the pullback here? Is volume on light volume, which could set up an A to B equals C to E up. Now, it says that you could also have a deeper retracement based on these signals out here, but we want to be paying attention to volume, because today, especially with the cold weather up in the Northeast and so forth, should be a light volume trading session. It's still really the holiday week. People traveling. If you're out there traveling, be safe. Just be careful. Just go easy. Just relax. Somebody's going to get in your way or do something or cut in line or what have you. Hey, if that's what made him happy, give him that gift of being happy out there. Just be safe out here. Now, as far as volume so far, if we take a look at, we'll look at the ETF structures out here. Let's look at the Qs. Of course, volume in the Qs, that's actually a bullish thing. I've shown that before. I'm not going to go into it at the moment. Right now, the volume on the Qs on the pullback, we've been trading for a total of 48 minutes, it looks like. Volume of about 10 million shares to the downside. Of course, light volume trading on Tuesday, that was with 24 million shares to the upside. So you got some volume picking up. The last benchmark volume that we could really be paying attention to is December 20th. There were 40 million shares on that trading session. But as we speak here right now, hasn't fallen apart inside the Qs, but we do have some volume coming out of that hot air balloon. Dow's off 87, S&P is down 11. We'll be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, Visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 98. S&P is down 11 right now. Net declining issues inside the New York Stock Exchange, down about 13.20. For the bears to truly take charge, and a little bit of a lagging indicator, I guess you could say at this stage here, would be, I think it's right around 2,400 or so, somewhere in that number. So not there yet, but boy, folks, that bearish reversal, that island reversal out there, very important both from the bullish and the bearish cause out there. That's the beauty of significant patterns like that. So it's something that we truly need to take a look at. Let's continue looking at the indexes, then we'll go look at the commodities, currencies, and so forth out there. As we take a look at the S&P 500, it came close to completing the 1 to 1.272 A to B equals CD up on Friday. That number would have been 1854, got up to a high of 1849, so close enough. Little bear sash candle here that has formed thus far this morning. So when you're buying and selling a D point, that's what you're looking for out here. That's on the daily chart. If we take a look at the Dow, of course, completing the 1,000-point consolidation move on Friday as well, getting up to that close to that 16. Remember, the 1,000-point consolidation area somewhere between the 500, 16.5 to 16.6. Well, it actually got up to 16.588. Close enough for me to be 16,600. We're getting a little bearish reversal signal here today. Price getting up towards the over, or was most certainly in the extended oversold territory. The last 1, 2, 3, 4 times up in this area is on the Dow, where we've seen some fairly deep retracements here. As far as potential retracements inside of the Dow, well, if we just take a look at that C to D leg, I'd have to say the sweet 618 area would be the number right around 16041. What I'd really be paying attention to is the wide-ranging bar. Forget about the Fibonacci number. I would be paying attention to the 1218, December 18th high, 16173 out there. So that's inside of the Dow. If we take a look at the Russell 2000, well, this thing had set up a number of bearish reversal signals and patterns out here. Inside of the Russell, you got the 3 drive to a top pattern that culminated and completed on the trading session of December 26th out there. Now, time-wise, the completion of the pattern was December 31st. If you were looking for symmetrical time, well, I guess one could say we really got symmetrical time at December 31st. But you had a little shooting star out there on December 26th. That was followed up by a bearish engulfing candle. The very next trading session, those highs were never taken out. That means the valid 3 drive to a top pattern is out there. You've got your 1 to 1 A to B equals CD. That price projection was 1167.65. It screwed up. It missed it. It got to 1167.96. It didn't get the memo out there. It was supposed to be 65. We got to like that as a perfect A to B equals CD pattern. So the Russell 2000, that says retracements abound. That could easily move all the way back down to the bottom of that 3 drive to a top pattern. I'd say somewhere in the 1103 area. That's the high of November 7th, and 10079. That 10079. How about 1079? I'll eventually, let me put my glasses on and I'll be able to read again. So that's inside the Russell 2000 out here. The composite, if we take a look at the NASDAQ composite, let's go see what it has done here. If you just take a look at time sequences between the previous highs out here, you had a high that came in. It was key reversal session on November 18th. If you go to the next high that took place inside of the composite, well, that took place on December 9th. And if you extend that out to the, that's a 14-day time period. Well, December 30th would have been the next time. Well, this went ahead into December 31st out here. So that forming a bit of a high out here. Where's the pullback inside this case here? And this is a bear separating line. So you had a key reversal session inside of the composite on December 27th. Today you've got a bearish separating line that is taking place. All those are bears. So the bears are most certainly to start the year out. I'm thinking that all the bulls have said, hey, this was a great 2014. Maybe this is how it's all playing out. And they're still out at the beach. They're still out at the mountains skiing. They're out having a good time. And so the bears, when the mice are away, it looks like today we can say that the Bears will play, and the Bears are playing all over the place, leaving all kinds of signs out there. Of course, maybe I don't think the Bulls are going to be too worried about it after the 2013 run out here. But volume is something that you and I, because we're near our screens, we're going to be paying attention to volume today because it should be a light volume trading session. And if it is not, that is Paul Revere running through the neighborhood saying, look out, because, man, the signals, the rats have been out there, folks. The rats have been out there for the last several days, and, man, those rats have come to town. If you take a look at the NDX 100, it, too, forming a bear separating line. Today, as we speak, making a 1-to-1, completing that 1-to-1 A to B equals CD up, doing that on Friday, doing that on Friday and Tuesday. My apologies. I'm thinking today's Monday and the market end on Friday. I'll eventually get this all set. We get back to this break. Let's go take a look at Goldilocks. Let's look at Hi-Ho Silver and the currency pairs. We'll be right back, folks.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the 3 most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these 3 sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of this special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 96. S&P is off 12. And let's go check in on the metals marketplace out there. Cue them up, Alberto. Cue them up, would you? Let's see if we get that. There we go. You gotta love the 2014 teamwork. Let's go check in on hi-ho silver out here. We got to be paying attention to this chart. Right now, we've got silver trading up 67 cents out at $20.04. Silver is trying to break that descending price channel out there. Boy, folks across the world, they'll be taking a look at this on their screens out here, because if, in fact, we see a break above this rising price channel, well, for anybody who is short the metals, the sphincter muscle ought to get a little bit tight out there. Right now, price traveling right into that channel line, and it does suggest that it really does want to get broken. Last time we saw a break of that area only lasted for 5 trading sessions out here. The key, I say, is paying attention to this close today, paying attention to the December 30th bar out here. You've set up a nice little morning star reversal pattern that sets up nice support out here down at the low of Tuesday. Almost said Friday. I caught myself in that low at $18.72. But I want to see silver Hi-ho silver prove itself with a close above that descending price channel. That's a price channel here, folks, that takes you back into the November 30th, 2012, so over a year ago. Out there, that's what silver is doing. It's up against resistance. It makes sense. It's going to try. It's going to punch. It's going to try to punch its way out of there. And if it does, folks, that's a big, loud message of silver. If we take a look at gold, well, there's light sweet crude. Light sweet crude, I mentioned this on Tuesday. I'm doing good. I'm catching myself out here. Light sweet crude as it broke that little rising price channel. It's got some follow through to the downside for sure out here today. Now you got a wide ranging bar, and the danger here is that could be setting up a very large A to B equals CD down. Heck, the small A to B equals CD down inside of light sweet crude. I would start with the swing point here from October the 3rd. That's at 104.38. That's your A point, your B point down here November 27th, and your C point out here on December 27th. As I had pointed out to you folks, my clients and I, we got into a long trade here inside of light sweet crude. It lasted for one full day because then I finally got the CFTC data out there, looked at the commitment of traders, and realized that the big money is expecting a big push lower into light sweet crude. Doesn't tell you how low, but they've moved over to the net short position inside light sweet crude. I suspect that 1-to-1 A to B equals CD, the way that light sweet crude has now come off of that C point, $88 and change would be its target area. It's going to have to break through that swing points in the 92-ish range. Let's go out to Paramus, New Jersey, to Victor. Victor, thanks for calling. Thanks for holding. How you doing today?
Good. How you doing? What do you think on that Ford? That Ford, Ford. Where do you think it's going? You told me 12 bucks this week.
All right, tell me. I'll pull it up here in a moment. Are you in the trade? You're looking to get in the trade. Tell me what's your time frame that you're.
Yeah. Maybe,
go ahead.
A year. Yeah.
Okay. All right, so Ford right now looks like trading out at about $15 and change out here. Now, if we're looking for a longer-term entry on Ford, what I would be doing is really try. Now, we'll take a look at this for you in a couple different time frames, but I would really be focused on the certainly on the weekly time frame. Now, your first problem here, Victor, is going to be that December 18th bar. Big volume coming out of it, 220 million shares to the downside. So Ford here is going to move down into the swing point from June 24th for sure. That's probably at the 1430 type area out here. So that's the next swing point for it to release any kind of information to you. If it's coming in with more than 58 million shares, that's not a... What's that?
Isn't that where it's at right now?
No, I show Ford, if I'm getting good data here. Let me see. January 2nd. No, that swing point high is 1483. You're at 1529. So it's got. Go ahead.
Where do you think it's going? Where?
Well, its next swing point that it wants to test is going to be the June 24th area, which is, and I'm looking at a daily chart, and the low of that swing point is 1430, and the high of that swing point is 1483. Now, if I put my, let me put this other, my momentum trading signals up on the screen here. Let's take a look at Ford, because what we want to do is we want to see what's Ford doing, because the momentum has certainly shifted to the downside, and it's done it both on the weekly and the daily out here, and that's not a good thing. I mean, that is not a good thing at all. So you're in major sell mode out here inside of this equity, and you're going to have to wait for that momentum to change, and it'll take a little while for that to occur on the weekly chart.
Next question.
Go ahead.
If gold gaps up, does it have to close gaps?
Did gold gap up? Let me take a look at gold here. The actual contract, no, it did not gap up. But maybe if are you looking at the GLD? Is that what you were referring to?
Yeah, because they actually have gold to deliver in that fund actually too.
Yeah, but here's how you got to take a look at. So when you're playing the ETF structure, let's say, and it works the same way. Whether Victor would be the GLD, whether it be the SPYs, the Qs, the IWM. What you really need to do is you need to go take a look at the underlying instrument and see what took place. So in the case of the GLD, your real focus needs to be on the contract itself. and the continuous contract shows no break of that area. So gold has not gapped up in order to have to go. And I assume you're asking that question because you were wondering, does it have to go back to fill a gap out there? So I would not pay attention to gaps if you trade the GLD or the SLV. And then you can, quite frankly, you can say the same thing for the SPY, the IWM, the diamonds, and so forth. Go take a look at the underlying instrument out there. So hopefully that helped you out there with regard to Ford. I would look for something else to buy other than Ford at the moment out here. Right now, we've got the Dow's off 92 points. We looked at silver. We were taking a look at light sweet crude. Let's go check in on bonds out here. We take a look at bonds right now. Just still traveling sideways out here. Traveling out at 121, 128.17. Make sure I got you. That's a January 2nd time frame. Nothing inside of bonds gets my skirt going out here. If we take a look at natural gas on Tuesday, moving down with a wide-ranging bar, making the you could argue a 1-to-1 A to B equals CD, but moving down with a wide-ranging bar, so you're having a little bit of a little relief here. Let's go take a look at the oversold condition, if it has reached that level. No, it hasn't. So it's got much more room to run to the downside. If we take a look at natural gas, let's go take a look at the Steve-O-meter out here. We were looking at Ford. This here in Ford, it showed that the weekly is in the sell mode. That's the red area on the screens that you're looking at. Same thing here on the daily chart. So both of those time frames showing that you are in big sell mode. Let's go take a look here at natural gas. This is the continuous contract that we are looking at versus when I brought, now that's the NQ, versus when I brought the February contract up on my screen out there before. So if we take a look at natural gas, the weekly chart shows you still in big bullish mode out here, but you are seeing some pressure inside on the weekly chart. You're in the caution zone, but I would say this is a little bit more than caution zone. You want to, at this stage here, if the resistance area ends up being about $4.35, that says that it's got more room to run to the downside. You can see that candle on Tuesday, nice big old bearish engulfing candle on Tuesday. That sets up your resistance at the high of the session from December 30th out there, and that high is 447. So at this stage, we're starting to see a few chinks in the armor, a potential good buy point on natural gas. Again, it's a continuous contract out here, $4.03. Let's go check in on, so we got bonds, we got light sweet crude, we got gold, we got silver. Maybe I didn't get gold when Victor had called, so let's switch over to gold. Gold here now, whereas silver was showing that descending price channel, gold has its work to do to get up to its descending price channel. But what gold just needs to do today to confirm a buy mode, not a bias, but a buy mode out here is going to be a close above really December 19th, and that is at 126 even. Steven, you're trading at 124.40 right now as we speak. Let's go check in on the currency pairs. Let's do a round there. Let's take a look at the euro-US dollar. Let's take a look at the daily chart. In the last show, we took a look at the weekly chart. So let's see what's going on inside the daily chart. Boy, there's a little reversal of fortune. The euro here is going to likely move down into the rising price channel. That's the black diagonal line on my screen. If we just take a look at retracements from its last swing point low, meaning November the 7th, to the high that was put in as it tried to bust itself out on December 27th, you can see that it's below the 0.382 retracement, doing it with a wide-ranging bar that says 0.618 is its target zone, and that would be at about $1.35. 1.3522 is likely its next mark out there. And that is on the euro-US dollar. That's going to continue to put some strength inside of the U.S. dollar index. Now let's go take a look at the here's the U.S. dollar, Japanese yen. I covered this in detail in the earlier show. And that is the following. Number one, it completed the 1-to-1.2728 to B equals CD. Did it with a doji candle a couple days ago. Dojis have got a meaning. Now it's a doji here. Virtually, you need to have the open and close at about the same price, and I do mean about the same price in order for it to have the meaning of a doji candle out here. The 1-to-1.272 is 105.65. The meaning of a doji is just simply that it is losing its energy. That's why it has more meaning when it is trying to move up into a resistance level out there, because it means that the buyers are starting to dwindle, and that's That's what we've seen here thus far right now today. U.S. dollar, Japanese yen, you've seen a key reversal session having completed, and a D point of an A to B equals CD on the way up. Still, what I would be looking for is not shorting this currency pair. I would instead be looking for long entries. I would be looking for currently buy patterns or something. You can say, well, why would you say that, Steve-O? Well, remember, you got to understand the trend time frames, the trends that you're in here. And the trend inside the U.S. dollar, Japanese yen, if we go take a look at a weekly chart out here, the weekly chart shows that it doesn't complete its larger 1.272 butterfly until you get up into the 106 level. No, the high that we've seen here this week at 105.43 does not qualify as reaching that level. So that's number one. Number two on the weekly chart, is that a bearish reversal signal? Absolutely not. We've got, a day and a half left of trading out here, so that is not a reversal signal. And then, of course, the pièce de résistance, that is the monthly chart here, and the monthly chart has broken a long-term, and I do mean long-term, it goes back to 1998, descending price channel. You can say that the U.S. dollar, Japanese yen is officially broken out. Yes, it's gotten to the 0.618 retracement, the level out here, but really not a big deal. Came into it for the month of December with a wide-ranging bar. Let's go to Pete in Orlando. Pete, thanks for calling. Thanks for holding. How you doing this morning?
Doing well.
Excellent. How was your New Year's Eve, New Year's Day?
Pretty good. I just went over to some families and enjoyed some time with them, and that was about it.
Excellent. Are you a University of Central Florida fan, a UCF Knights fan?
Yes, my daughter went there.
Oh, that's great. Well, she had to be enjoying last night.
Yes, she was.
Yeah, but they came out like on fire. Against folks they play. If you didn't get a chance to watch it, UCF first time into a BCS bowl game, and they were of the 50 games, how many ever they actually play out there. They were, I think, the largest underdog, if I'm not mistaken. Maybe about 20 points or so, Pete, something like that?
It was 17.
And then they beat Baylor 17, and they beat them by, 10 points?
10, 52 to 42.
Yeah, quite a rout. So congratulations to them. You wanted to take a look at the General Electric. Tell me what you're doing and how I can help you.
Well, actually, I'm just looking for what you think it's going to or coming down to. I'm out of it now. I was in it for a long time, kind of watching it going up and down, really not doing much for me, and all of a sudden it took off about mid-year, and I just stayed in it till just about a week ago, and I got out, just took all my profits off the table, and was just looking to see what you think it's going to be either heading to or coming down to.
Okay, excellent, and congratulations. What a nice trade that you had out there. If I take a look at the momentum behind the move here, and then we'll go take a look at some other patterns, perhaps that could be could be moving into back in September, maybe around the time frame that you got into it, or so around September. On the weekly chart, this thing moved into a nice momentum mode out here on the weekly chart, and it really still is in on a longer term basis. If this was a holding or something that you had in a 401k account, I would say you just want to stay in here because you haven't gotten, from a long-term standpoint, you've not gotten any kind of a reversal signal. And this is very bullish-looking weekly chart out here. The daily chart actually gave you a nice little, the last time that it gave you a nice little buy signal on the daily chart on the October 11th time frame. And it's been in a strong bullish mode ever since that as well. Pete, would you do me a favor and hang on through this next break?
Sure.
Okay, we're going to go back out to Pete in Orlando. His daughter celebrating that win by the UCF Knights, defeating Baylor last night. We're going to take a look at General Electric. We're going to go try to figure out where it is headed to. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 88 points. S&P is down 11. The composite is off 28 points. So we're going back out to Orlando with Pete. We're taking a look at General Electric. Pete had a incredibly successful trade out there, and he's now looking for a entry point, another entry point into General Electric after having taken his bread off of the table. And we're going to use a number of different tools out here. We'll try to do this here in the next 3 minutes with you, Pete. Number one, what I've drawn on my screen, just take a look at all the different tools that many of the different hosts here use. If we take a look at primary trading range boundary lines, that would be one spot that I would look at. Those are natural areas of where price comes together in horizontal levels. $27.14 is your is a primary trading range boundary line. If it breaks through that, it could easily pull back to about 24.42. Right around that 24.42 level candle would actually be the bottom of this nice rising price channel that it has been traveling into. So it's somewhere around the bottom. That rising price channel, Pete, that I'm using, if you're a technical, analysis guy, I'm really using the October 5th candle session out there. As really my open. I can see that it shifted a little bit while I was drawing that. But right around that area is, and the reason why it could come down there, because it hit the top of the rising price channel. It did it really perfectly on Tuesday, so you really timed that. And on Tuesday, it also had completed a 1 to 1.272 A to B equals CD up. So ran into some resistance out there. If I were to use my Chapman wave count out here, and just quickly run those numbers, if we take a look at the accounts, also looks like GE hit a fourth peak out here on December 26th. Actually, maybe the fifth peak was actually on December 31st now. So where can it pull back to? What I would be paying attention to here, Pete, is the trading session on December 20th. That's the last time we had volume there, and the top of which is 2702, or the low is 2702, and the high is 2747. If it gets inside there and is pulling back with volume, that had 78 million shares. Today, it's pulled back with 12 million shares in an hour and a half, so it doesn't have the volume to the downside. You wouldn't necessarily expect it today and tomorrow, but Monday would be a whole different thing out here. Your optimum place, because I would be targeting that long, really your optimum trade to get into it. And your time frame on this that you're looking for again is what, more intermediate time frame or what?
Yeah, more. I mean, I'm not in any hurry, obviously. I try to get the possible, the best possible trade on it, and was just wondering, where it looked like it's hit a top, what you're saying, and I'm just trying to see where it could come back to, just to pay attention to it, just to maybe get a little portion back in, come in slowly, I guess is what I was going to try to do again, so.
Yeah, you really got to watch it right now with regard to volume, and the best signal probably comes back at October 18th out here. If in fact the market's going to turn, and this is going to obviously turn with it, that would be one of the spots that I would be looking for, because it really could line up with the bottom of that rising price channel. And so that's at the moment, that's what I would be looking for.
Found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.